that it's not the elections, that's pretty much in the bag. The market's also priced. What happens in the next budget, which is going to be critical in terms of a directional move for the markets. You think the elections up next is pretty much par for the course now? The markets have already assumed what the outcome is going to be, and that's going to be continuity.
Yeah, I think so. I think that's pretty much in the bag. I mean, one can keep arguing on the number of seats that they'll be able to get, but the fact is that it's in the bag for the ruling coalition per se. However, there may be some amount of I don't know, disappointment or euphoria around that because normally it happens, right? Elections are one event that happens once in 5 years, and there's a lot of rumors flying around, a lot of people giving out their thoughts. So it's going to be fairly choppy around that time also. However, don't forget that immediately after the elections, there's going to be the central budget, which is going to be presented, I think, sometime in June end or July beginning. And that will actually, as Sabir has rightly pointed out, I think we believe that that is going to set the trend for the next couple of quarters, per se. So let's just keep our fingers crossed.
So let's say from April to July or April to August, when the budget is not going to be out, how do you see the market moving?
So basically, they could be very clear that even April quarter itself, I mean the April to June end or whatever, July, if you will, that quarter itself is going to be fairly choppy and volatile. We're not looking at a big correction, but we are looking at quite a bit of volatility in the market. And frankly, I mean, when there's a volatility getting built in, and it's fairly wild volatility. I mean, you've seen that in the past. I mean, you saw that in the month of Feb, you saw that in the month of March, right? That is when you want to have a slightly lower beta in your portfolio, if you will. So basically, you try and fall less, but try and capture the upside to an extent. I mean, don't be so lower beta that you're not able to capture the upside too. So partake in the upside, but try and conserve on the downside, because once you conserve on the downside, there's no parallel. I mean, you can't, whoever is beta 1 plus will never be able to catch up with you there. So that's the kind of portfolio we're trying to develop out here. And that was the main reason why we brought out a balance advantage fund, because we wanted to have a low beta offering, which can be easily managed. The beta in that portfolio can be easily managed by way of balancing your equity exposure.
If you like this video, then like, share and subscribe to ET Now.